Hello and welcome to LedgerCast. My name's Brian Krogsgaard. I'm here with Josh Olszewicz, who's not introducing the show this time, but that's okay. Hey, Josh.
Mr. Brian, how are you?
I'm doing well. IchiCast had one episode. It was a good episode, but I guess we're back to old boring LedgerCast for a while now, until we find a better name. If anybody has new name submissions for the podcast, you're welcome to send them in, although Josh assures me that he was joking.
For some reason, your audio just went to trash. We might have to re-record this.
No, our recording will be fine because we're recording it directly into my hardware devices. So it's just the recording that you see on Zoom, which you should short Zoom. So
okay, my bad.
It should be fine for everyone else. DeFi Cast. Ooh, Josh would leave the podcast if it was DeFi Cast.
I would have to find a new residence, I think.
A new residence for your audio contributions.
That's right.
Man, tell you what, the old corn, it went and it broke $20,000. And we were a little dicey last week. We were like, it has to bounce now, and then it bounced. So we didn't play out the double top Adam and Eve, whatever you want to call it. We were sitting around 17.7 when we had the show. And if you longed the show and stayed long, you made a lot of money.
If you did nothing like me, you made significantly less money.
Significantly less, but still plenty because, as we were just talking about, you're still spot long. When you're in a Bitcoin bull market, you still stay spot long.
If you're above ground, if you are a breathing human being, you are permanently spot long in my eyes. There's really almost no reason to ever get out of coin. Because if you do, you're paying taxes, you have to send coins to an exchange or meet somebody in a Walmart parking lot. Like, there's no good reason to go to cash, right? There's just none. I'm sorry. There just isn't. Up and to the right, up only.
Well,
this isn't top bull market things. This is just like a life philosophy here. I'm just laying out,
It did go down 70% or something in the bear market, so.
Yeah, well, you know what? I was there at 180 buying, so I've seen worse. Okay.
Yeah,
we were on the verge of a failed experiment, Brian.
Yeah. So
where was the sailors of the world then? Where was the Sailor Moons at that time? They weren't here.
So it looks like top to bottom, it was actually about 83 to 8 or 84% from 20K down to 3,100. Now we just spent 2 dailies in a row going up about $3,000 each day. So it certainly puts bear markets into perspective for me. It's like just
that's why. Yeah, I mean, we talked about this probably months ago, maybe, but when people are talking about being short versus long, it's like the short side is what 80% there, 70% there, and like the upside is in the tens of thousands. It's like the path is obvious, right?
Yeah, but it's hard to imagine multiples. Like when you're in the dumps, you're like, will we ever have an all-time high again? And then what's the target potential from there? And
it's all about perspective.
Yeah, now everybody's talking like we could hit 400,000 in gold parity, and you're like, what?
But people were saying that stuff in 2013, 2015. People are always that sort of moonshot narrative is always there. It's just about the belief and perspective. It was there in March. It was there in January 2019. It was certainly there in December 2014. Trust me. These types of predictions.
I think what it indicates for me is looking back. It's if you believe in the fundamental thesis of Bitcoin that it's not going to die and that it'll have new cycles. The obvious play is to try to accumulate as much Bitcoin as possible through multiple methods, right? Dollar cost averaging with new funds if you have them, and then every trade being geared towards increasing your Bitcoin rather than focusing only on the USD values, which can be hard to do when you're sitting there, say mid 2018 when we're sitting at 6K, we break down, you capitulate, because you go to 4K or whatever, and a lot of people did that. We lost a lot of folks in that time.
Yeah, I mean, I would have been better off selling, even selling as late as November 2018 and rebuying. I would have been better off doing that. I'm not saying that's what I did, but cash, BTC wise, people, just for the people who weren't here in the pre-show, talking about if I ever get out of spot position. I don't, but anyway. Yeah, last week we were bearish. Last week I was bearish because it didn't look so hot, and then literally the weekend we had a weekend party shortly thereafter, and just that was the rocket ship fuel that we needed, I guess, right? To break higher highs, break all-time highs.
Yeah, I mean,
it was literally the moment our show ended. It just wanted to show us up as hard as it could.
Well, I mean, it's hard to say exactly like this is where you want to go margin long or whatever. It was it would have been totally reasonable if it kept going down and we went to 15, 16K. Totally reasonable to do that. It took what we called kind of the Omega Bull scenario of quickly going up, consolidating higher at the ceiling, and then just breaking right on up. And we said if that happens, that's Omega Bull. Well, we went from 19.5, which is the level that we talked about, to 23,000. And we also went straight to the yearly pivot, the R3 yearly pivot that we had talked about on the show. Drilled right into it. If you see that there.
I love pivots. There's nothing in this realm I love more than pivots, honestly.
Yeah.
They're so simple.
Why don't we talk about them a little bit? Because, we've mentioned it some, but some of our listeners may not know what makes a yearly pivot, why, etc. But just looking at this chart, you can see how they were important levels multiple times over the past couple of years and have been in the past as well. So you are looking up baby pips right now for how to calculate a pivot. But
I was going to say, we can actually cheat what we think the pivots are going to be next year by calculating
do the endpoints. Yeah. So for people listening, the pivot levels for next year are based on the highs and lows of the previous year, along with the yearly close. So if we close the year at 23K, that'll be the P line, and then the highs and lows will be extrapolated out from that. So Josh, if you do 40, if you want to do the calculation.
Yeah, go for it.
If you do 3,600 for the low, or is it a closing price?
Whatever.
And then do 23.7 for the high, and the yearly open, the prior yearly open or the next yearly open. Let's say we close.
Oh, it was this yearly open, 2020's yearly open. No.
Does it have a close on there?
Yeah.
Oh, okay.
So right. January 1st, December 31st, or whatever.
Yeah, so 12,945. No, that was the R1, I'm sorry. 81.37 was the yearly open for 2020.
Okay.
And then the close, let's say it's 22,000. Just made that up, but so we stay up here somewhere. So this would calculate what it'll be for next year?
Correct, yeah.
All right. So the
16, 29, 36, 49, basically.
So the R2 would be 36K, and the R3 would be 50K. I like it.
Yeah. Looks good.
And there's a basic formula, and there's multiple ways to do pivots, but there's a basic formula for how those are done. But it's extrapolating what those levels should be, and kind of like standard deviations away from the opening and closing price. And yeah, anyway, they're useful. Legacy markets, they play pretty well as well. And you can do monthly pivots and stuff, but the yearly pivots are always targets to watch out for. So that's where I got that 23K resistance from, and lo and behold, that's where we really found our first resistance in all this action that we've had since 20K.
They're just so elegant and simple and non-subjective,
Yeah. Let me show the low time frame of that for people at home. I mean,
it's just weird that the price even cares about the, math stuff. I don't know. It's just TA, right? But this is the most mystifying to me because it prints January 1st,
Yeah. and then it's applicable all year.
And then it most of the time actually works. So I don't know. It's weird. It's just weird, right? It's like voodoo for anybody who doesn't believe in TA. I don't know. It's weird. That's all I'm saying.
Nature's math.
Nature's math, I guess. I guess you could say that.
So we hit the okay, we broke the highs. Here's our target. When I talked about 23K as my 2-week target, we hit it in 24 hours. So now I'm left wondering, like, okay, what do we do from here? We're sitting here painting a bull flag on low time frames, going into yet another weekend, which we used as our reason to pump last time. We just closed a quad wishing in legacy markets, which coincides with Tesla going into the S&P 500, and it's going to be the 6th largest company in the S&P 500. So they had to sell quite a bit of the other 499 companies in order to fit Tesla. So it caused a little bit of funkiness in that market today. The dollar is bear flagging, I guess, even at these crappy levels. It could break down further. So we just hit a level that I thought was important, but we also, it kind of makes me think we could just melt up more. I don't
know if the dollar is tradable on technicals, like low time frame technicals, honestly.
You don't think so?
I feel like it's just so event and news driven. Like there's clearly a bear trend. It's clearly oversold. The market could care less. It's just like it's going to zero. Yeah, like that's the mindset of people right now. I said yesterday, like we were talking about 88. We've been talking about 88 for a long, long time. But if like let's say it breaks through 88, which we mentioned a few times
then
already,
it's 80.
Like, man, like this BTC could go to levels just by default that are just insane. Right?
Yeah, Bitcoin to 6 figures. 60. Well, let's say 60K. Maybe first tripling. That coincides with the Dixie going to 80 to me, like just by nature, like you said, like people buying into the long-term trend. At some time, we talked about the Dixie breaking down from, this is a weekly chart now, this multi-month bearish continuation pattern. It did it, and now we've had 4 straight weeks of down, looking like we might have a 5th. And if it breaks through that, it's going to need some time to chill at some point. Like this thing spends multiple years going sideways at times.
Yeah, so, I doubt it breaks 88 on the first try.
Right. That's kind of what I'm getting at. I feel like when we get to 88, 89, I feel like we're going to pause. Maybe we spend like a quarter, maybe 2 quarters, kind of sitting in sideways land there. But it certainly seems like it's pricing in stimulus or whatever else you want to call it. All of this is super bullish for Bitcoin, sets up a macro cycle for Bitcoin to be able to do a lot. And if it breaks below 89, which it paused at in 2018, goes back to the 2014 levels of 80, that's our narrative for much more, much more.
Yeah, that's the narrative for stuff I don't think anybody's prepared for.
Right.
I don't want to know. Want to know what the country is going to look like when we're back below 88. Really,
Yeah.
We're going to see some inflation stuff, I guess. I don't know. I don't know this stuff.
I'm
just a guy who trades in his mom's basement. Okay, what do I know?
Well, here's one fun level to look at. The bottom in 2018 was the 200-month moving average, which is now down at 86.86. So let's just call it 86. And that coincides with a level that it topped at twice in the Great Recession and then the retest of 2010 with the dollar when it found weakness twice. So there might be some hidden support at like 86 after 89. And if it fails that, I mean, it goes back to the 90s, that 80 level. It was the bottom in 1991, 92, 95, before it went on a huge bull market up to 120 in 2001. So 80 is a massive level, massive. So I feel like our bull market is probably going to rest in the hands of this journey from 90 to 80. If I'm trying to align mega macro technicals of the dollar with Bitcoin. Bitcoin has a chance to do well even without the dollar going to crap, but the likelihood is the dollar going to crap.
I think even more important than the obvious, like mathematical correlation right now is people are seeing it and talking about it. Like I see more and more Dixie versus BTC conversation. I actually see that more than the Tether and BTC price mark conversation now. So that's interesting.
Yeah. And it's a worthy conversation. I mean, to go back, the huge move that it had down, the Dixie, started January 2017. Well, guess what? That was the last time we started a massive bull market and new highs on Bitcoin. And when it finished was January 2018 when we started a bear market. So our last couple of cycles have coincided with the macro cycle for the dollar. And I don't think it's a coincidence that it's doing so again. So
I agree.
Food for thought there.
1.8% inflation, you know, all that other stuff. That's good for BTC. Yeah, I think we're on the right side of this trade for sure.
And the right side. You know, the legacy investors too, they can't not talk about Bitcoin. Every podcast I listen to that's talking about macro stuff is talking about Bitcoin. And they're talking about it as a gold replacement, as a gold additive, as a uncorrelated asset. Bitcoin is in the big leagues. That was a podcast title sometime in the last year since we bottomed, but it's true. You know, we're in the conversation with macro assets of the world, and yet if it reaches its potential, we're still several multiples below where it should be priced in order to matter. Right? It's still, we're still early if we fulfill the macro dreams that are looking more and more realistic, as we have things like what happened this week where some fund was like, oh yeah, we have $700 million in Bitcoin. And it's like, what? You know?
Yeah, not only that, but they bought in November.
Yeah.
they just got in.
They just bought. They were like, new all-time highs, bull market, let's go. And we're sitting here thinking like, this is awesome. We're on the moon, but we're just on the launch pad in that.
Josh is bearish
conversation.
We're like, it's going to mean revert for sure. Meanwhile, these funds are T-wapping, V-wapping in.
Yeah, they're buying the dips, and I think there's an argument that we can make that they're going to continue to buy the dips. I tweeted a poll several weeks ago asking, before we had the 15 or 17% dip, whatever we got there, and I was asking like, okay, do y'all think we're going to have smaller dips, maybe an average of 15 to 20% instead of an average of 25 to 30%? Because these types of investors, they know they want their allocation, so they'll just start buying the dips sooner. And so far, we see evidence of that. And I'm curious if that will maintain through this cycle where, you know, your Bitcoiners and your crypto folks are like, yeah, we're going to get 35% dips or whatever. And then it never happens. And then they suddenly get chased much quicker, you know, so they're more like quick V-shaped 15% dips instead of 2 or 3 week 35% dips.
Yeah, we saw in March what we saw in March, though. Who was here in March? You know,
people weren't here in March, and plus that was a liquidity event for the whole market, which that'll continue to be a risk for Bitcoin as well. Like if the whole market does anything like it did in March, it could do that again.
That was, BitMEX. If BitMEX on BitMEX specifically, probably if Bitcoin wanted to go to zero on BitMEX and almost did. BitMEX is less of a thing now. I don't know. Where were they in March, right? I don't know. To me, it was the opposite. It was treasuries selling in March. Like they weren't buying, right?
Yeah. It was. That was a worldwide liquidity event. You know.
I agree.
Indexes.
I agree.
They all did that. A force majeure type of situation with the coronavirus.
But what's to
And
say that can't happen again? Yeah, not that
it
that's what
won't.
you're
Yeah,
saying.
I don't
But
think it'll look the same even if it does happen again. But as an example, we could have a continued recession, or like more long-term effects start to come out. One of the differences I see is it looks like the Fed and the incoming administration will be very prepared to spend lots and lots of money. So I don't know that it'll look the same as these traditional contracting economies, and I feel like it would make a dip worth buying as much as anything else.
yeah, I'm just concerned, just as I was for the ETH ICO treasuries, if all these corporate treasuries, like on the way up, it feels great, but on the way down, it doesn't feel so great.
Naturally.
I don't know, like realistically, what their time horizons are, their targets are. I assume it's 5 years, right? Like I don't know, 5 to 10 years.
I think for a lot of them, I think some of these hedge funds, especially the earlier ones, hedge funds like to capitalize on their wins in Q4. So if someone's sitting on 100% gain in Bitcoin and they're here in the last week, they might say, you know what, I'm going to take this profit, book it for my investors, show it in my reports, and that way I don't have as many requests to withdraw my funds, you know, because it's all about booking those wins in Q4. People more interested in the tax side of things are probably going to hold until January. But I do think there's going to be a time for mean reversion. And I'm pulling this up again because it's worth continuing to talk about this parabolic advance that we began in July is for 33K by May, and we're well ahead of it. Well ahead of it. We pointed at this potential ascending triangle. That ascending triangle could have gone until the end of the year, and we broke out of it early. So like everything's going really, really fast. So we have time to come back down and to retest and retrace and go sideways and still hit 30K plus before the summer. Easy, based on this line that I'm showing. So there's time to cool down, but the hard part is deciding like, okay, I'm actually going to take profit or I'm going to short. And I don't think that's really the way to look at it. Like we talked about with whether you hold spot Bitcoin, I think it's like be satisfied in your spot positioning. And then if you have a portion of your fund that's, designed to take advantage of buying dips, whether in an altcoin or Bitcoin, maybe you have a small amount of, fund cash that you try to time for market, market participation to go margin long, to buy a dip on spot, to buy an altcoin, whatever it is. So I think you can take some profit in that regard, but I can't imagine a scenario why I would want to say like go 100% cash because I think we went too fast or whatever. Because we could go to 27 or 28K in the next 2 weeks, and it's not going to shock anybody. It'd be stunning, but not shocking. If that makes sense with the difference.
Yeah, I mean, it's coming from somebody who's been here in 2013 and 2017. I mean,
it's hard to hear
anything. I was just gonna say like anything is possible. Like the speed at which, once the market decides there's one direction, the speed at which that can happen is breathtaking.
Yeah, a 10% daily candle now is $2,300. If it goes up $2,300, a 10% daily candle after that is $2,500. That's how markets go parabolic. So 3 big days and you're at 30K.
The mainstream media can't, like you're saying, can't stop talking about Bitcoin right now. I see a MSNBC or CNBC clip, whatever it is, every other hour about somebody asking somebody about their price target for Bitcoin.
Yeah. I don't have Skew open right now, but something that I found stunning looking at Twitter was that the most active call strike right now for Bitcoin is the end of January 30K. That's a quick mover. And what can happen, Suzu talked about the gamma implications. And I don't know if anybody knows the way the Greeks work in options, but gamma essentially creates this breaching level to where your people who want to stay delta neutral, they have to offset something. So if they're selling those 30K calls, they also have to long Bitcoin, so they're buying at the same time as they're selling those calls to other people, and essentially that's forcing the price to go up. And if your call skew remains that way, these same people that are staying delta neutral are constantly buying futures in order to stay delta neutral while they're selling those 30K calls or whatever else it is. So if there's a whole bunch of 30K calls being weighing the options market that direction, it's forcing those people those market makers to buy futures to offset that and maintain a neutral market outlook. But at the same time, they're forcing the market up. So Suzu was saying he thinks that there's going to be gamma implications from that, meaning it's going to continue to force the market up as more and more attention draws to those 30K strikes. And if we, get closer and closer to those 30K strikes, the more interested people will be in those 30K strikes, and it's like all of a sudden you magnet to 30K. That's pretty extreme. Like, it's not necessary that it goes all the way, but it can draw us up quicker and make the market move quicker than we anticipated because of those types of effects from market makers and options markets and stuff that wasn't very mature in previous market cycles.
Yeah, open interest is a big deal for sure. I mean, have you seen that Bitfenix open interest
on Ethereum
on
or
ETH?
Bitcoin?
On ETH, sorry,
on ETH, it's like $2 billion or something.
It's insane. Yeah, it's like 1.65 or something. I don't know.
Yeah, which terrifies me. Our friend Johnny Moe mentioned a parabolic advance that was shaping up on Ethereum, so I drew that out going back to September, and we just broke out of an ascending triangle, and it looks like a retest, although that move up to 720 was a little scary. And if we keep following that line, Ethereum could make all-time highs. And guess what, Josh? Q1, your favorite Ethereum quarter. If we follow along this same parabola, it'd take us to 13 or 1400 by the end of February.
Yeah, I think if it does that like because Bitcoin does something crazy. I don't think it's going to do that on its own.
Well, if Bitcoin goes to 30K, Ethereum could go to 1200.
Yeah, it's just going to follow along. It's not going to. I don't see it leading. I don't see it outperforming.
Why not? Why
not in the near term? It's underperformed quite handedly over the past 2 weeks, right?
Yeah, but it overperformed in a big way, in July and August. On a weekly chart, I know you think it's bearish because you think it could break through this level, but the point stands, it's at supports essentially between like 0.025 to 0.028 or so. And it's hit that on the current weekly, and I think you can make a case for it making a right shoulder of inverse head and shoulders. Yeah.
I like the macro inverse head and shoulders possibility. I also like the micro inverted cup and handle bearish reversal situation. I just don't think the narrative for ETH is there right now. No one. We're not seeing institutions coming on CNBC saying they bought millions of dollars of ETH, right?
Didn't one of them? One of the ones that just announced a Bitcoin allocation, I think they also at least bought some Ethereum.
Okay, well,
according to the Bankless podcast, which I was listening to this week.
In any case, most of them aren't saying they bought, ETH.
It's certainly.
I think the eyes right now. I think the eyes are on BTC. That's going to shift and change and adjust as time goes on, and people start taking profit and rotating and other stuff. But
we are starting to see retail come back. My dad texted me and he was like, I should have listened. You start to get some friend messages. I've seen a lot more like screenshots from people in Telegram where their friends texted them and they were like, hey, what do you think about XRP? And, retail's not going to go straight to Bitcoin. They're going to be looking much more at altcoins, whether you like it or not. And
no, and that's always the case. That's always going to be the case because of the integer bias and not understanding I can buy 0.01 BTC versus 10,000 Ripple or whatever. But the people who know better are obviously going to gravitate towards BTC regardless. It's the people who don't care about price, the people who are here for the hedging out of the US dollar death or whatever, or insurance against insanity, whatever you want to call it. I think that buying demand is going to outweigh anything in the near term.
Yeah.
We'll see what happens in Q2 next year, when I think ETH should do extremely well. I don't think right now we're going to see all-time highs on ETH by maybe beginning of Q2 or something. I don't know. Just throwing something out there.
I do think all-time highs on Ethereum are within the realm of probabilities now more than possibilities, whereas I was having a hard time picturing ETH to get to 1,400 or whatever the all-time high is. And I think that we will see opportunity for that. We didn't bring it up at the top of the show, but we should have. If people do want to buy altcoins, they should be doing it at Matcha, and they can go to ledgerstatus.com/Matcha to do so. MATCHA. You know what? You keep your custody of your coins, and it's a fantastic DeFi trading interface, and they pool liquidity from multiple sources. They're an aggregator and a great trading experience built by the fine folks at 0x. The way that I trade when I'm capitulating altcoins while Bitcoin is going parabolic, or if I'm looking to get a little sneaky and buy some altcoin dips after I think Bitcoin has had its run, I'm going to make those trades with Matcha. Been doing it for months. They're a great partner, and everybody should try it. Ledgerstatus.com/Matcha. If you're just going straight to Uniswap or straight to Sushi, you're doing it wrong, because they pull from all of them to make sure that you get the best prices. So go to ledgerstatus.com/Matcha and enjoy your trading. And for the person in the stream chat, I did not memorize it. I wing it every time, but I use Matcha. He
doesn't even have a paragraph.
I have no paragraphs. I have no notes. I just talk about stuff I like. How about them apples? But yeah, they also have limit orders now, so you can set your take profits for your moon missions. It's good stuff. Matcha's building a lot of good stuff, and we're happy to have them on as a partner. So I am long Ethereum right now, Josh. I'm even a little bit long Ethereum relative to Bitcoin as of last night, mostly as a method of increasing my position sizing. So I'm long versus the dollar, I'm long versus Bitcoin, and I'm in on this ascending triangle retest idea, Adam and Eve retest idea, whatever you want to call it. I look here and it looks to me like Ethereum is flagging just above the breakout level. So it lagged because Bitcoin broke out and went ham, and Ethereum broke out and just stopped. So like Bitcoin goes $3,000 and Ethereum goes a couple of % above its breakout triangle. Both look like we're going to get movement right after the podcast again and make us sound silly inside 24 hours. But I do feel like Ethereum can play some catch up if it really tries hard. And I still have this $800 target of ours, which is the measured move from the triangle breakout. That would go to $800, $789, that we talked about weeks and weeks ago. So the percentage of move that you get between here and the target is 21%. So what do you have? Bitcoin has to go a lot to go 21%. It has to go to 28K to get to that same level. So that's part of my justification for why I think Ethereum can outperform here if it continues to go up.
What do you think about a time component with the CME ETH futures being opened? So for BTC in 2018, that was kind of like the top.
Yeah.
I think it's February 18th. They said the CME futures are.
You said February 18th?
February 18th, 2021.
I guess it depends. Are we gonna, if we pump into it, maybe that'll be a top. That's a long time between now and then, though. So it kind of depends on the sentiment. I'm long biased all of 2021. So I feel like everything is bullish. Whether it can outperform Bitcoin is a much more nuanced discussion, because I want to maximize my Bitcoin. But if you're just looking at things in a USD sense, then I don't think it necessarily has to mark some kind of top. But if it's at like making an all-time high around that point, then it might be a little dicier, right? Than if it was still lagging.
Yeah.
Josh, we can't get far without at least mentioning this news, and we'll speculate on why they just made the decision. But Coinbase filed they filed an S1, which is essentially their summary of information and proposal to go public to the SEC. But they kept it confidential, which is an option that you have when you file. But keeping it confidential usually means no one knows you filed the S1. Coinbase wrote a blog post and said we filed an S1, but we're not telling you what was in it. So it's like, I don't understand all that, but I don't know why they did that. Like, why do you make it confidential if their numbers are going to be public when they go public? It makes no sense to me. Nevertheless, they announced it one day after Bitcoin topped 20K, and there's no chance in my mind that they didn't have that sitting in their pocket waiting for Bitcoin to make this move to time the release of their IPO. Don't you think?
Yeah, I think so. For sure. I don't know if we talked. I feel like we talked about this months ago about the IPO, but them pulling the whole like you can't talk about politics at work thing, and you can leave if you want.
They were making all the preparations to go public.
Yeah, but we had talked about Coinbase IPO like maybe even years ago at this point. I don't know.
Yeah, because
who knows? Who cares? Whatever.
Their last raise valued them at $8 billion. We'll talk about why would they care, and I'm going to talk about why I actually think they're smart to go public now. Their last raise valued them at about $8 billion, but I think they were worth $12 billion estimated at the end of like 2017. But they raised money after that, and I think it reduced their valuation, if I remember correctly. Either way, the estimates seem to be placing them closer to maybe $30 billion on going public now, which is a lot of money. I think they're smart to go public now because I think the more and more you look at Coinbase, the more you realize they're not necessary as much anymore because you can onboard in other ways, simpler ways, like Cash App or something, and you don't need them for trading. There's fantastic non-custodial solutions like Matcha, and there's other exchanges that have better options and still, good liquidity and whatever. It's not to say Coinbase won't still play a role, but like they put their fees back on taker order. Like they're never really seeming to fight for their customer experience. It always feels like a taking relationship for Coinbase, and I feel like them going public when the general public doesn't know all the other options yet, and they're just getting started back with the bull market or whatever. Coinbase will be able to pull a nice premium, and they'll be able to maximize their stock price. So it's a cynical view, but it's the view that I think is true.
Yeah, I think it's a sunsetting move on the company for I think most people have moved on from Coinbase.
Most insiders. I still think it'll probably end up being a, kind of like MicroStrategy, but different. I want to invest in blockchain, but not buy Bitcoin directly. I only buy securities. Yeah. And, you find out freaking Berkshire Hathaway bought some, something like that, investing in the picks and shovels.
The people who've traded on all the exchanges know that Coinbase is amongst the worst experience. It has the most bugs, has the most problems, has the most continuous issues.
Has downtime despite 3 years of bear market to figure their stuff out. And literally as soon as there's volatility, they go down every time. So,
I had this conversation with the exchanges at the crypto, I don't know what it was called, MCC thing.
Magical CryptoCon.
Yeah, like is it difficult to scale up quickly when there's just like several multiples of people visiting your website? Sure, but come on, at some point it's just embarrassing, like they shouldn't go down when the price goes up every single time, like that. I could never trade there reliably. You just can't. You just can't.
Yeah. So I think they're clever to go public when they are because, most people that's what they look at is what. That is crypto. I mean, my dad sometimes has made the mistake of like, have you seen how Coinbase is doing? It's like, Dad, it's Bitcoin, not Coinbase. I'm giving my dad a hard time today. He's a good sport. But a lot of people, when you start talking about crypto, they bust out their phone and pull their Coinbase app, or it's like showing each other in the bar, 2017 style. Now they don't do it at the bar. I guess nobody goes to the bar now. But it's still, from a namesake perspective, it's still where you buy crypto for your average person, and it'll probably perform well for the IPO. So doing it the day after Bitcoin breaks 20K is just it makes me so cynical. Like, everything they do is about them and their price and their profit, and like they just it's like a evil corp situation for me. You know, it's like I never feel like they're just on the cultural side of crypto people. You know.
Yeah, and especially now that they're listing literally anything and everything. You and I could make a coin right now and get it listed by next week. That's what it feels like.
Only if we also got Andreessen Horowitz to invest in it,
Yes.
then A16Z would get it listed for us.
It's like,
I know we sound very cynical, but you know what, Brian Armstrong and your PR people and whoever, you make us so. It's kind of a bummer. So.
And this isn't like a Sally Come Lately thing. This is stuff they've been doing for years. So.
Yeah. And it's like,
wish them luck, wish them the best. You know, despite us dumping all over Coinbase just now, I actually used Coinbase to buy Band, which is something we've been talking about.
Should have used Matcha
for weeks. I had to go from USD. I didn't actually know.
You had to onboarded fiat to buy an altcoin.
Yeah, I'll just say the amount.
How far you've come.
I'll say the amount I purchased because I don't really care about it. So I didn't realize I could actually do this. Like I sent $3,000 USD directly to Coinbase. This is going to sound like an ad for them, but it's not. Instantly was able to buy a Band. I had no idea. I
Didn't
could
have
do
to
that.
wait.
I didn't have to wait because before you have to wait. Obviously, there's fees and all sorts of stuff. You do have to wait to pull it out 10 days after it clears or whatever it is. But that made me bullish for alts listed on Coinbase because if retail does come back, that's what a lot of people are going to end up doing. They're going to charge their credit card or debit card or whatever instantly and just ape into this.
Yeah, Surgeon Gamer General asks a good question, and he's asking, what are some alternative exchanges? I imagine it's mostly for onboarding. So for onboarding, I think one of the cheapest is probably Cash App these days, because they do let you withdraw your Bitcoin now. Like you can buy on Cash App and then send it somewhere else. And you can send it to your own wallet if you have like a Ledger or a Trezor or a Cold Card. You can manage custody of your Bitcoin in those ways. And then if you're doing Ethereum, they also have those, but then you can trade. If you're in the Ethereum ecosystem, then you could trade on Matcha and use WBTC for BTC exposure and buy any ERC20 token through their platform. And then other centralized exchanges, it really depends on your country, but some of the ones, if you're trading the majors, I would think the reliable ones are going to be your Bitstamp, Kraken, Binance, and they have different features depending on which ones. Another onboarding exchange or offboarding exchange would be Gemini, the Winklevi exchange. I wouldn't trade on Gemini, but you could like do your initial buys there. Am I missing any, Josh? Any decent ones?
I don't think so. I mean, I just use Kraken for the most part for everything these days. Binance US is an option. Like if you want a UI that looks good and a trading system that is decent, Binance is always your go-to.
Yeah, I mean, I would say like Binance US is an option. If I had the opportunity, if I wasn't American, I would use regular Binance for just about all my altcoin trading because they have the most liquidity, the most pairs, and all that. For centralized exchange trading. For DeFi stuff, obviously, I like Matcha because it uses all the pools wherever the pools exist. And you can trade stuff there before it ever hits a place like Binance, which is also often a selling event for some of those smaller caps that get listed. Baffleman mentions Dharma as well. It's another one that's like mobile only, I think. So that could be interesting. But yeah, there's a lot of places to trade.
Have you used FTX US? Did you mention that?
I've signed up for FTX US, but I haven't actually traded there because they don't really have a lot available.
Yeah.
But yeah, and if you're looking for margin, there's really nowhere to trade with margin for an American unless it's on a DEX or if it's on Kraken. I don't or CME. You can go direct to CME if you have enough an account there and can meet their contract limits and all that, because I think a single contract is 5 BTC.
Yeah, the most questions I've had lately are, where can I trade with leverage as an American? And does cloud work on low time frames? Those are my two most frequently asked questions.
You know what? We're gonna have to have a crypto for beginners episode again and do some baseline stuff. But this is all the type of things we talk about when the market is hot, which it is right now. And how could people not be excited when we're sitting here at 23K and it's not like a 5-minute, end of run type of pump. It's almost pedestrian. So that said, holy cow, man, we're getting far away from these moving averages. Just the 20-day moving average, which is gone from sideways back to near vertical, is at like 19.5. 200-day moving average is at 12.4K. So we're a 50% drop from the 200-day moving average. That's a long way.
Yeah, I mean, I think all the concerns I've had or we've had about mean reversion don't just disappear because we're higher now.
Yeah,
for me, they're very much ever present in the back of my mind. Looking at the 20 week moving average, looking at the daily key June, looking at the 200-day moving average. Another question I'm getting is should I buy now? I'm not an investment person. This isn't investment advice, but something I tell people is what I'd be doing is I'd just be DCAing a little bit every week, every day, whatever, and then just buy the crap out of the dip when it inevitably happens, because it always happens. It's gonna happen. Don't be surprised by it. Don't think it's not gonna happen. I guarantee you it's gonna happen.
yeah. And if my thesis of the dips being a little smaller is true, then maybe you start buying those dips at 15% and then more at 20%, more at 25%, and then wait. Or align it with these moving averages. The 25 or 20 week moving average is at 14K. These types of scenarios, though, I think what could happen is like what happened in 2019, right? We were far away from the moving average, and then we made this giant pennant, and the moving average caught up over the course of 10 weeks. And then it made its decision off of that 20-week moving average. We could do the same thing at 20K in May. If we stop right now and we start consolidating on high time frames, we could just sit here and have made our high for the first quarter of the year and spend 2 months consolidating before we move up again. That's something we could do. If we do something like that, you could think of it as in that's bearish, this is the end of the cycle. I won't be doing that. I'll be saying we just consolidated right on top of our all-time high and we're about to go bananas, and that gives us the fuel to go to 40K or something. So I don't know when it's going to stop, but at some point, whether it's a dip down and go right back up, or we consolidate and wait for those moving averages to catch up, we will hit that 20-week moving average, and when we do, I'll buy it. That's the way I look at it.
I think the most difficult thing for me trading this is to have that recognition that we're overbought and whatever mean reversion is 50% down.
We're overbought, and at the same time, remain overbought.
Right, that remain overbought, but at the same time, want to size up into a position at some point and hold it over multiple days. That's that was the concern in any bubble, right? Buying and holding is a concern on margin in a bubble, because you keep thinking to yourself, I don't want to be that guy who loses money on the bull run because I was margin right. I got chopped up. I was margin long. I opened too big of a position too late, that sort of thing. I long the top. That's what's running through my head. And the narrative is I'm bullish. I want this to go up, but I'm just more comfortable, obviously, buying the dip with anybody else. But
yeah,
I think the other issue I have is not using the lower time frames enough. I look at the high time frames too much. Right. You can trade. I keep looking at this over and over again. This 4 hour, we had both
the
BTC
TK recross.
Yeah, we had the TK recross on the cloud. Here we had the bullish Kumo breakout here. We had plenty of evidence. We had on chart patterns. We had an Adam and Eve here. We had a flag here before this broke out on ETH. This whole thing is an ascending triangle. It's just ETH, but yeah, I need to be.
It told you to go long.
It did, and I just need to switch my mindset of I'm going to hold positions for a less amount of time, but leverage up.
Trade on the 4-hour chart instead
Trade on the
of the daily.
4. Yeah.
Because on the daily, we could stay away from your key decision points for a long time.
Right. Like you're missing so much of the move waiting for that dip, obviously. Right. Like, whereas this is all very tradable, you know, like
Right.
I know people right now who are doing extremely well.
Trading very low time frames.
Trading low time frames. Yeah, for sure.
Yeah. Hey, so I want to wrap up talking about Bitcoin dominance. I just threw a couple of lines on a weekly dominance chart.
I like that.
Yeah, so it's like this broadening wedgie thing, but also over the 20-week, 200-week moving average that we tapped into at 61. If this breaks up over this trend line, I think that signals that like alts are dead for a while, right? But we are at resistance on dominance, and I think we could see a retrace and some moves in altcoins, which would align with Bitcoin essentially going a little slower here and giving altcoins some time to breathe and do their thing. That doesn't give me like some massive opinion, but if we break up, I feel like we could go to like 75% dominance by Bitcoin, which would be huge. That coincides big time to me with Bitcoin just mooning to like 30K in January, you know?
Well, somebody asked us earlier about LTC USD and the strength there. And typically LTC, like in 2017, LTC was a late mover. 2018, sorry. If you look at the LTC BTC pairs, usually that's end cycle because people are rotating out of stuff they already made money in and looking for more somewhere else. Even SNX, you know, any of these altcoins that are mooning, or, you know, even Ripple and Stellar was up 20% the other day.
Yeah.
So
those
usually
are all the dinosaur coins.
yeah, but like that historically has been like late cycle stuff. So if like talking about dominance, I don't know. You know, dominance is just kind of non-tradable to me. I just use it as sort of like a market sentiment sort of
it's
thing.
good. It's good to check out what's, you know, what we could be on the verge of. What I'm personally seeing is, you know, we talked about ETH going slower. You look at some other alts, like Aave is a big one. Been consolidating, not making new highs, but obviously, if you look at this chart, historically extremely strong. You look at that setup that you talked about for Band, huge inverse head and shoulders potential sitting over the top of its 200-day moving average. The way something like Curve curled up. Now, this is new age alts. These are mostly like the big DeFi coins. SNX just broke up today. These signal to me like they want upwards volatility to chase Bitcoin a little bit. Whether it lasts a week or a month or 2 days, I don't know. But they do look thirsty for upside to me.
Yeah, Algo's another one that looks pre-breakout.
Yeah, it looks
just like
good.
Band. BNT had its move. You know, if you want to think about like what this could look like for these alts, just look at BNT. I pulled up the wrong ticker, I guess. BNT.
Yeah, BNT's Bancor, and they claim to have solved impermanent loss.
But if you look at like that edge-to-edge inverted head and shoulder thing,
and that pump came from a Coinbase listing. They took a lot of flack from. They had UMA, I don't know if how you pronounce it, and Compound listed, which Coinbase Ventures had invested in, and their direct competitors, Synthetics and Aave, were not listed. So,
surprise.
So right after that, they listed Aave, Synthetics, and BNT. So related? I think so. So yeah. These alts look pretty good to me, while Bitcoin's sitting there at that R3 resistance, just had $2,000-$3,000 days. I see the world where Bitcoin sits here and goes sideways for a week and gives these altcoins room to do some damage. At the same time as some of our early retail interest comes back in the game, Ethereum plays catch up. it seems to me like alts have a week ahead of them to do well, unless Bitcoin goes straight up to like 28K, which I'm not seeing as likely, but anything's possible, I guess.
What I'd like to see from alts here is a multi-month bearish or bullish divergence, multi-week, whatever, similar to, almost identical to December 2019. You're getting all-time lows with a bullish divergence. At the end of the year, alts do better in Q2. Like, I don't know. This is setting up to me as another sort of start opening your coffers for some alts here and get ready to buy some oversold despair stuff you wouldn't normally buy just to play the rotation game.
Your Q1 rotation.
Yeah.
Yeah, I agree. Josh, one thing that died this week is my 2020 prediction. It lasted 11 and a half months and it was looking good. But breaking through the all-time highs and trading above them for multiple days killed it, because I guessed that if we went above, I think I said 12K, that I thought we could retest the all-time highs, but I didn't think we would go above them. So that's dead. My end-of-year prediction was 16K. I guess that could be alive if we get hosed over the next 2 weeks, but we outperformed my expectations for the year. I said that I thought we could maintain 5K on the downside, which we did. So calling 5K and 20K in the same year, I felt stupid, and then we did that and a little more.
Yeah, I remember that show. I remember talking about that.
Yeah, first week of last year, or of this year. So people will have to look forward to the end of the year. We'll make our predictions for 2021.
Yeah, one last thing people are talking about in the chat now that we haven't mentioned is this Mnuchin, FinCEN wallet regulatory stuff. It's going to be bad, obviously, to have to KYC like your own individual stuff for most people, but it's not going to like destroy crypto at the end of the day. I think it's going to be.
I heard that the proposal was not so outside of what's kind of expected of you now, that it was more of kind of a warning shot, something like that, whatever you want to call it. But I haven't read the details of exactly what to take from this. We'll try to talk about that maybe a little next week.
I think the Bitcoin maximalists are going to say like, it's the end of the world situation. Like, this is horrible. We should fight this. And we should. It is bad, but it's not going to destroy crypto. Like, at the end of the day, it is unlawful search and seizure type stuff, I think, in my mind. But yeah, something to consider. I don't know if it's going to move the needle for price, though. I think people are buying and they don't care,
And it was talked about for weeks. So I feel like, if anything, we priced it in. All right, man. I think that's all I got. I'm excited about this market. I mean, we're running hot. That's what Bitcoin does. When it goes, it goes. So
yeah, I mean, we did what I didn't think we could do, which was make higher highs into all-time high. But the news deluge, is that a term? The typhoon? Deluge. The news typhoon of people in suits buying just was unsurmountable for the bears, I guess.
Pretty much. And we look at this on the Forever BLX, it looks like Moon City. Stock to flow looks like it wants to be proven right. A part of me wants to be really, really wealthy, and a part of me wants stock to flow to fail. These are in conflict.
You can be both people. That's okay. I also looked at stock to flow this week just as a curiosity to see where it was.
Are we catching back up, because we were a little under it, right?
Yeah, we are. We were under it, still are under it, but we are catching back up for sure.
Yeah. So, will we hit six-figure Bitcoin in 2021? You'll have to tune in for our Christmas episode. We'll make our predictions. But we'll be here for the after show for a second. Thanks everybody for joining us on the episode today. You can subscribe on iTunes to check it out. It's our pleasure to have you here. If you want to join us on the streams, you can do so on twitch.tv/ledgerstatus. And if you love the show, rate us on iTunes, give us a review. We appreciate those very much because they help other people find the podcast. We need these new people to find the podcast. So give us a review on iTunes. Talk to you next time. Trade on Matcha. Ledgerstatus.com/Matcha.
The easy river has just run dry. In a house of cards.